There are three ways to recognize an expense. You can either pay as the expense occurs, like cash, pay before the event, this would be a prepaid account, expense. Is that different?
Prepaid account. No, but it might be confusing.
Oh, did it die? No, just trying to find
it's not different, but like, because we're gonna keep saying expense, it might get confusing. It's okay, just keep reading it, and then when you edit it, you can just like put the good ones, and even if it like jumps, it'll like it's still a video, because it's still filming.
Okay. There are three ways to recognize an expense. You can either 1, pay as the expense occurs, like with cash, or 2, pay before the event, and then this goes into your prepaid expenses. Or number 3, you can pay after the event has occurred, such as an unpaid account. Today we'll be focusing on the prepaid expenses. A prepaid expense is an item, like a magazine subscription, that you pay for before you use it.
The money in the business bank account for magazines is technically still yours. If you cancel your plan before the time is up, you will be refunded the money initially invested. Initially, it may seem that your net worth decreases because your cash decreases upon your subscription. But in reality, your one-year magazine purchase is an asset because you own it. This is now a prepaid expense.
Continuing on with prepaid expenses, our example is the lovely magazine subscription. So we're going to say that we have paid for a 12-month subscription of a magazine. The service provider would be Horseport. They require that you pay for it in advance. So we're saying that the 1 month of a magazine subscription is $10 per month. So the company wants the $120 up front before they start sending them. Okay, so let's say that your opening balance for cash is $120 and that the service provider for the magazine wants you to pay $120. So we move the $120 from your cash account into your prepaid expenses, and your cash account will go down to 0. You're not gaining or losing anything because you're just swapping these two accounts. So now that we have recognized the changes in the accounts on the balance sheet, we're going to talk about if you were to cancel the magazine subscription. So if you were to cancel the subscription the next morning, like say the day after you bought it, the company would, all the money that you've already given the company, you'll receive back. So basically, you have given the company an interest-free loan. If you were to cancel the contract in 3 months, so as a visual, take away 3 magazines from our 12-month subscription, you will get $90 back, $30, because remember, it's $10 per month for the magazine subscription from the $120, and you'll be left with $90 that the magazine subscription, the company will give back to you. So say if you were to cancel the magazine subscription in 6 months, so we'll take away another 3 magazines, the company will give you back $60. So your prepaid expense account will go down to $60 because you are recognizing 6 months of the subscription that the service is providing to you.
Once the service is provided, your net worth does decrease because your cash that is in their bank account starts to decrease. After the first month service is provided, you will recognize $10 as an expense for that month. This is where your net worth decreases, and the remaining prepaid portion will be $110. An increase in expenses relates to a decrease in net worth. Cash does not have to be involved to increase an expense and decrease net worth. You will recognize $10 as an expense for the next 11 months, as the supplier provides the service.